be recorded. My name is Rafal Markowski. I'm a member of the IASB technical staff, and I'm joined today by my colleagues, McGeachin and Ana Simpson. I would like to note that the views expressed in this presentation are our own, and they do not necessarily represent the views of the IASB or the IFRS Foundation. There are two objectives of this session. First, we will provide you with an overview of the request for information that you may find useful when you are gathering and providing your feedback to the board. Second objective is to allow you to ask questions about the consultation and share your comments, feedback, and reactions. And you can do so by using the chat box. With that introduction, I will hand it over to Ana, who will provide you with some project background and talk about the first part of the consultation, the strategic direction and balance of the board's activities. Ana will have to leave after the first part of the presentation, but we would like to encourage you to email her with any relevant research and evidence, which we will cover later in this webinar. And I will post Ana's email in the chat shortly. Thank you, and over to you, Ana.
Thank you, Rafal. Good morning, everyone. My name is Ana Simpson, and I'm a member of the IASB technical staff. I will provide you with the background for the agenda consultation and speak about the first part of the request for information. So the IASB undertakes a public consultation like this one every 5 years, and this is the third time it conducts a public consultation on its activities and its work plan. So the objective of this consultation is to seek and obtain, for the board to seek and obtain feedback on three main areas. The first one is the strategic direction and balance of the board's activities. The second one is on criteria for assessing the priority of financial reporting issues. And the third one is for the board to obtain feedback on any new reporting financial issues that could be added to the work plan. So responses to this consultation will shape the board's thinking on its activities and its work plan for the next 5 years. And this will be based on the feedback, but also the board, when shaping the work plan, the board will use its own experience and expertise. It is important to note that even though the activities for the next 5 years will be set, there is scope for adding any urgent issues to the board's work plan. And some recent examples of that are, for example, COVID-19 related rent concessions that the board had to publish, and also previously the IBOR reform and its effect on financial reporting. So on this slide, there is a timeline which shows how the agenda consultation will unfold. The comment period for receiving feedback ends in the end of September, and by the last quarter of this year, the board expects to start deliberations, and the publication of the feedback statement is expected sometime in the second quarter of 2022. As you can see, and you probably all know, the new IASB chair, Andreas Barkov, will join in July of this year. So this will give him a chance to be involved in setting the board's agenda for the next 5 years. So before I start with the overview of the first part of the request for information, I just wanted to say a few words about how this agenda consultation is different to the strategy review that the IFRS Foundation trustees are currently conducting related to sustainability reporting. With the third agenda consultation, the board is seeking feedback that will help prioritize its activities within the current scope of the board's work. Whereas, and this is different from the strategy review undertaken by the IFRS Foundation trustees, because the strategy review is exploring the potential for expanding the foundation's role into sustainability reporting, and also potentially setting up a new sustainability standards board. So the IASB will continue to set the requirements, reporting requirements within the current scope, which are the financial statements and management commentary for profit-oriented companies, and therefore it is not. It will not seek feedback on any issues related to sustainability reporting, except to the extent that these issues relate to the current scope of the board's work. And an example of this is improved reporting on the financial effects of climate risks on the company's assets and liabilities. And if the strategy review identifies any need for capacity from the board for interaction between the Sustainability Standards Board and the International Accounting Standards Board, then obviously this will be taken into account in setting the priorities and allocating the resources of the board for the next 5 years. If we can go to the next slide, thank you. So as I mentioned earlier, the request for information seeks feedback of the agenda consultation, seeks feedback on these 3 main areas: strategic direction and balance of the board's activities, criteria for assessing the priority of financial reporting issues, and any feedback on setting priorities on any new financial reporting issues. And even though the focus that we've seen is mainly on the third one, it is important, and the board is looking forward to receiving feedback on the first and the second issue. So now if we, I'm going to start the overview of the content of request for information. The first part. So this red circle describes the main activities of the board. And even though the setting new IFRS standards and major amendments to IFRS standards is probably the most familiar activity, the board is also involved with maintenance and consistent application of the standards, the IFRS, maintaining the IFRS for SME standard, digital financial reporting, which I'm going to talk about shortly, understandability, ensuring understandability and accessibility of the standards, and stakeholder engagement. So what the board is seeking stakeholder feedback on is whether the balance of these activities should be changed. In other words, if the focus of on one of these activities or more than one should be increased, decreased, or left unchanged, and whether there are any other activities to be undertaken by the board. But again, this would be within the current scope of its work. So next slide, please. Thank you. So this table shows the current split between of the board's resources to each of the 6 activities, and these statistics have been estimated. The level of resources that go to each of these activities is based on data for the past from the past 3 years. And as you can see, most of the resources are allocated to developing new IFRS standards, but this is still under half of the resources, there is stakeholder engagement takes up about 20 to 25% of the board's resources. Maintenance and consistent application is the next one, and then 5% to each to IFRS for SMEs, digital financial reporting, and understandability and accessibility. So, and the assumption here is that the overall level of resources will remain unchanged. And again, if more resources are allocated to one of these activities based on the feedback that is received, it would mean that less resources will go to another activity, and therefore it is important for stakeholders to also indicate which activity they think should be reduced, the level of resources. So the 6 activities, I will go through and briefly describe each of the 6 activities that you saw on the graphic representation earlier, and starting with the first activity. The objective here is for the board to research financial reporting issues and, if appropriate, to develop major new financial reporting requirements. And what the board currently does here is research and standard setting projects and post-implementation reviews. Post-implementation reviews are carried out within 2-3 years after a standard becomes effective, and currently the board is carrying out a post-implementation review of IFRS 10, 11, and 12, and has recently started a post-implementation review of IFRS 9 financial instruments, the classification and measurement section. And major upcoming post-implementation reviews are for IFRS 15, the revenue standard, and IFRS 16 leases, as well as the other 2 sections of the financial instrument standard, which relate to hedge accounting and the impairment. So what could the feedback, the stakeholder feedback indicate? What more the board could do here? Examples of this is to take on new projects that address financial reporting issues that are still outstanding and need the board's attention. And there will be, we'll come back to that later on in the presentation. So if we can go, yes, thank you. The other activity of the board is maintenance and consistent application. Oh, sorry, we have some intervention. Can I ask that the microphones are muted, please? So the maintenance and consistent application activity is carried out together with the interpretations committee. And the objective here is to help stakeholders obtain a common understanding of the financial reporting requirements. And what the board currently does is, for example, to monitoring the consistent application of IFRS standards by, for example, issuing narrow scope amendments and interpretations, issuing committee agenda decisions, publishing educational materials. For example, in relation to the COVID-19 crisis, such educational materials were published for IFRS 16 and IFRS 9. And what the board could do more is it could work with stakeholders to identify application challenges, and this could be done through existing channels such as agenda decisions and educational materials, but it could also be done through new channels such as organizing regional IFRS training workshops or case studies that could develop capacity to make judgments to apply the requirements. And it is probably worth mentioning here that the board is not responsible for the consistent application of the standards, because there are many other parties involved, such as preparers, auditors, regulators, but the board plays its role together with these parties to ensure the maintenance and consistent application of its standards. So the next activity I'm going to speak about is the IFRS for SMEs standard. This is the objective of this standard here is to provide, of this activity is to provide financial reporting requirements that are tailored for companies which do not have public accountability. And what the board does within this activity is to perform periodic reviews of this standard and publish educational materials. And what more the board could do is work with stakeholders to support the consistent application of this standard, provide more educational materials, or work with national standard setters towards ensuring global adoption of the standard. And currently, the IFRS for SME standard is either permitted or required in 52% of the jurisdiction. So roughly half of the countries require or permit this standard. So if we go to digital financial reporting, I'll spend a bit more time on this activity because it is very relevant to the current state of the global economy. The objective here is to facilitate the digital consumption of financial information. And today the board focuses on supporting the digital consumption by maintaining the IFRS taxonomy as new standards are developed. And the IFRS taxonomy facilitates digital consumption so that the global comparability we have on paper extends to the digital world. And it can help, for example, enhance comparability of financial statements in different languages. And the digital consumption of financial information is increasing. However, there are some challenges in relation to this digital consumption of financial information. There is limited and inconsistent adoption of the IFRS taxonomy around the world, and the data quality is in need of improving, and also the accessibility of digital financial reports is limited. So these challenges are very important to consider because they could mean that the benefits of having globally consistent standards could be diminished. And therefore, the question here is what the board could do more. And currently, for example, the presentation and disclosure requirements are digitally neutral, but what the board could do more in this respect is that it could consider the technology, it could move from the technology neutral approach to technology first. What this would mean is that, for example, the location of information may be less important, whether a piece of information is in the primary financial statements or in the notes to the accounts. And also, if digital consumption is prioritized, they may no longer, the constraints on how much detail is presented may no longer be so relevant. And overall, the cost benefit of setting standards may change. Another implication of prioritizing the digital consumption of financial information is that the classification, presentation, and disclosure requirements may become more important. And to give you an example, when companies report operating profit and profit before tax, it may be clear in a paper report that operating profit and profit before tax are the same if there is no item in between. However, in a digital world, operating profit and profit before tax are not the same, and therefore the classification, presentation, and disclosure requirements will need to be carefully looked at in order to make sure that when users look for profit before tax or operating profit, which in a paper report could be the same thing, will also get the same result in digital reports. So another thing the board could do is to identify partners and work jointly towards a vision to create digital financial markets, and where accessibility of high quality electronic data is prioritized. So as we can see, there are possibilities, but there are also challenges. And therefore, this would require careful thinking and most importantly, joint efforts of various market players. And if we move to the next slide on understandability and accessibility. So this is an activity of the board, which is probably not as well known as for example, setting new IFRS standards. The objective, but it is equally important. The objective here is to improve understandability and accessibility of the financial reporting requirements. And what the board currently does for understandability is try to reduce unnecessary complexity for companies while improving the quality of information for investors and draft clear standards. And what the board could do more, for example, is to create a comprehensive inventory of possible areas of unnecessary complexity and amend the existing requirements in these areas. Or, for example, get involved in other projects to reduce unnecessary complexity. On accessibility, the board publishes annotated standards with cross-references and provides tools for easier navigation through the electronic standards. And what the board could do more is work towards, again, with the other market players, towards improving the technology and helping stakeholders tailor the changes to stakeholders' needs. And finally, I would like to say a few words about stakeholder engagement. If we can go to the next slide, please, Rafal. And this is an activity of the board where the objective is to obtain views of the stakeholder base through the development of high quality financial reporting requirements, and also the objective here is to promote the acceptance of the standards. So the board has a large stakeholder base, which includes auditors, preparers, analysts, investors, national standard setters. So it is actively engaged with all these groups in developing the standards, and also after the standards are developed to promote their acceptance. Again, the agenda consultation aims to gather feedback on what more the board could do, increase engagement through novel ways, and provide more investor-focused materials and initiatives. And this is something that will again come as a feedback from the agenda consultation. So with this, I will conclude the overview of the first section, first part of the request for information, and will pass over to Rafal to continue with the second part of the agenda consultation. And I apologize, but I will need to leave you in the capable hands of Ana, McGeachin, and Rafal, because I have another commitment to attend to. And please email me any academic evidence or questions. I think Rafal should have put my email in the chat box. Thank you very much, and bye-bye.
Thank you, Ana. I'm just monitoring, checking the chat box, and I don't see any questions or comments. And I would like to encourage all participants to share your views, reactions, because this is very important consultation, and we are very keen on hearing stakeholders' views. We have 144 jurisdictions where IFRS standards are required or permitted. So we are listening very carefully, and this is strategic consultation which will help shape the board's future priorities. So I would like to once again encourage you to ask any questions and share your views. I can't see any, so I will move to the second part of the consultation, which is about the criteria for assessing which projects to add to the work plan for 2022 to 2026. And as you can see, we are moving our focus from all of the board's activities that Ana has just described to the one that you are probably most familiar with, that is research and standard setting projects. And in this part of the consultation, we cover the criteria that the board considers in deciding whether to add a new project to its research and standard setting work plan. And we are asking stakeholders two simple questions: whether the board has identified the right criteria and whether the board should consider any other criteria. The overarching consideration that the board gives is to assess whether the potential project will meet investors' needs, taking into account the costs of producing the information by preparers. So that's the overarching consideration. And then we have 7 specific criteria, which the board proposes to use in deciding whether to add the project to its work plan. And the first 4 criteria are derived from the Foundation's due process handbook. The other 3 criteria have been identified in the previous agenda consultation. The board has applied them and they have worked well in practice. So the board is consulting on these 7 criteria as a single set. And obviously the thing to bear in mind is that prioritizing potential projects will require judgment, and it cannot be an exact science, unfortunately. In addition, the relative importance of any criterion will vary depending on the circumstances surrounding a potential project. So, for example, some stakeholders may think that the rising importance of intangibles merits standard setting. However, some other stakeholders may think that potential project on intangibles could take significant amount of time and may not even be feasible because of high degree of complexity involved. So that's very short part of the consultation where we are asking about the criteria. I'm looking at the chat box to see if there are any comments or questions before I move on to the final part. I can't see any. So I will just move to the third final part of the consultation, which is potential future projects, new financial reporting issues that the board could add to its work plan between 2022 to 2026. And again, the objective, and again, in this part of the consultation, we are focusing on research and standard setting projects. And the board is seeking views on which projects it should add to its future work plan. And there are few things to bear in mind. First, the board will continue existing projects because stakeholders have previously identified them as priorities. And reprioritizing these existing projects could lead to inefficient starts and stops. Moreover, there are some points during the project cycle, for example, where the board publishes a discussion paper or exposure draft, that stakeholders can share their views about the ongoing projects. So that's the approach the board has taken. It has assumed that it will continue the projects that it has currently on its work plan. The board is also committed to conduct required post-implementation reviews, and have also set aside some capacity for urgent projects that may arise after the consultation. And you may remember that that was the case after the previous consultation. The board added IBOR reform and its effects on financial reporting projects, and also dealt with COVID-19 related rent concessions during the COVID crisis, as Anna mentioned. And after setting aside the capacity for these commitments, the board expects to be able to start a limited number of new projects in the period from 2022 to 2026. And I stress the word start because once the project is added to the work plan, it will take some time to complete. So stakeholders cannot anticipate that the project will be added and completed within this next period from 2022 to 2026. And based on the assumption that the board leaves unchanged its current level of focus on research and standard setting projects, and I will go back to the first part of the consultation that Anna presented. So the board currently spends around 40–45% of its time and resources. And when I'm talking about the board, I'm also thinking about the technical staff. And the board focuses in 40–45% on research and standard setting projects. So if that level of focus is maintained and is left unchanged, and taking into account all those commitments that you can see on this slide, the board expects to be able to start 2 to 3 large projects, or 4 to 5 medium, or 7 to 8 small projects. And this is or, not and, in between, unfortunately. Or a board can add an equivalent combination of large, medium, and small projects. So the board has limited capacity to add any new projects to the work plan. So we need stakeholders' views, what their priorities really are. And just to provide you with a little bit background, in preparing for this agenda consultation, the board for the first time conducted outreach, mainly with its advisory bodies and standing consultative groups, to identify potential projects that the board could describe in the consultation document. And the board's objective in describing potential projects is to help stakeholders respond by providing a common understanding of the financial reporting issues that could be addressed in a potential project. And the thing to bear in mind is that the list is not a draft work plan. It is just a tool to ensure everyone is speaking the same language, and to ensure that we can get focused feedback and as focused as possible. And obviously, stakeholders can suggest other financial reporting issues for the board to explore. So that list should not constrain stakeholders' feedback whatsoever. And the list of 22 described projects is included on this slide. As I mentioned, in this part of the consultation, we are seeking stakeholders' views on what priority they would give each of these potential projects. And we are asking about each of these potential projects because high priority for some investors may be low priority for preparers, as well as feedback may differ by jurisdictions and regions. So to be able to analyze the results and come back to the board, we would find this information useful. We, the staff, the technical staff. And within each description, we have proposed different types of work that the board could undertake to address the issues identified by stakeholders. And what is important, we aim to gather focused feedback. Therefore, we are asking stakeholders if their prioritization refers to all or just specific aspects included in the project description. So, for example, a project on cash flows could mean better information about operating cash flows split into the ongoing maintenance and the growth spend, which is likely to be a small project. Then, next possible solution to address issues raised by stakeholders is to undertake targeted project to improve some aspects of IAS 7, including providing information about non-cash movements, for example, supply chain financing arrangements. And that likely would be a medium project. Or the board could undertake a comprehensive review of the standard of IAS 7, which is likely to be a large project. And as you can see, to help you provide feedback, each project described includes an estimate of its size, small, medium, or large. And these size estimations may help you determine your priorities in the context of the board's capacity to add any new projects to its work plan. And this capacity is 2 to 3 large projects, 4 to 5 medium projects, or 7 to 8 small projects. However, assuming that the board undertakes its current level of focus on research and standard setting projects. So that's the second part of the consultation. I will stop now to see if there are any questions or comments. I can't see any. Hopefully everything is clear and helpful, and I will now hand over to Anne.
Thank you, Rafal. The next couple of slides look at two particular examples of the projects that are described in the request for information, operating segments and the statement of cash flows. And I want to use these examples to illustrate what feedback from academics would be helpful for the board. So looking first at operating segments, IFRS 8 adopts a management perspective whereby the information about segments that's disclosed is the information that is provided to management. And this might be different from the information prepared for the rest of the financial statements. Transactions could be accounted for or presented in a different way. And during the outreach for the request for information, some investors supported this management approach, saying it's generally useful because it reflects how management views the business and provides insight into how the business is run. It also allows for information to be produced on a timely basis at relatively little cost. However, some investors expressed concerns about the information disclosed applying IFRS 8. And in particular, they said that a potential project should consider improvements to the criteria for aggregating operating segments into reportable segments. So that's the information that you actually see in the financial statements. And investors were saying that because this relies heavily on management judgment, you don't get enough disaggregation. And so thinking on this point, in order to assess a possible project in this area against the criteria that and Rafal and Ana were talking about, we would be really interested in academic evidence on what drives the aggregation of operating segments into reportable segments. And also more interested more generally in academic evidence about the use of management judgments and how that affects aggregation and disaggregation. So, for example, do more prescriptive requirements lead to more disaggregation? Another point that investors made was that repeated changes of the composition of reportable segments clearly affect comparability between periods for a reporting company. So here we'd be interested in academic evidence about what drives changes in the composition of reportable segments? How often do they occur? And do such changes actually reflect real changes in the activities of the entity? And then sort of finally, on this slide, some investors suggested that the board should require disclosure of additional line items by segment, even if the information is not regularly provided to the chief operating decision maker. IFRS 8 previously required disclosure of segment assets, regardless of whether they were regularly provided to the chief operating decision maker. But the board removed that requirement, partly to converge with US GAAP and partly because such information isn't necessarily available if it's not regularly reported to the chief operating decision maker, for example, in industries with low use of physical assets. And this question really gets to the fundamental principle of IFRS 8, which is that the information given about reportable segments reflects management's perspective. And so a question here is, to what extent should entities be required to produce information solely for financial reporting purposes? And does that affect the quality of the information? Rafal, if we could move on to the next slide. So the next example I'd like to look at is the statement of cash flows. And as Rafal noted, there could be, projects of different size undertaken on the statement of cash flows. But many stakeholders have suggested the board undertake a project to completely amend, to review IAS 7 completely. IAS 7 is an old standard. It's been around a long time, and many think a fundamental review is long overdue. This slide gives examples of the problems that stakeholders have with cash flows. Evidence of how it's used, who uses it, what do they use it for, problems that arise from its use, and any potential solutions. So, for example, just looking at A on the slide, stakeholders said they have difficulty reconciling the statement of cash flows to the other primary financial statements. In particular, they have difficulty reconciling the statement of financial position to the statement of cash flows if there are significant non-cash transactions. So things like leases, supply chain finance, and factoring of trade receivables. And one suggested solution to that is that companies might present non-cash movements in the statement of cash flows. And so we'd be interested in evidence about what the effect of that might be. Would that give useful information, or would that actually just create confusion because you'd have a statement of cash flows with things that weren't cash flows in it? And that comes back to the question of what do people use the statement of cash flows for, and how do they use it? So what would be the best way of trying to address some of these problems? Just picking on another example in this slide, if you look at G, financial institutions at least argue that the statement of cash flows is not relevant for them. It doesn't give any useful information. And we'd be very interested in if there's any evidence that either supports that view or gives a different perspective and says, actually, well, no, even for these entities, the statement of cash flows does provide useful information. If we move on, Rafal, to the next slide. So, I mean, generally the point I want to make is that you may know of much research that could help provide the board with evidence that would help the board then assess potential projects against the criteria that we discussed on slide 19. That assessment is, a very important part of this whole process. The staff don't want to just provide the board with, a level of stakeholder demand for different projects. So many people wanted us to do this, so many people wanted us to do that. we really need to also provide the board with evidence that backs up an assessment against the criteria. So, we are looking for questions and they can be grouped in certain ways. So here we talk about the importance of the matter to investors. Does the issue affect the primary users? Because that's our main objective as defined in the conceptual framework. Does in fact existing practice adequately address the question that investors are asking? And indeed, very importantly for an international organization like us, is the diversity in practice. And diversity in practice, I mean, across industries, but also across geographical jurisdictions and regions. And then sort of focusing on, is there a problem in the financial reporting? So if there is that because the standard isn't asking for the right things? Or is it because people aren't complying with the standard? And if it is to do with compliance, is standard setting feasible? Or is anything that we do not going to help? And actually the problem needs to be addressed by other parties in the financial reporting world. And also, if we've tried doing standard setting in the past, is there anything new that people are telling us now that would mean that a project now would come to a different answer or might be more successful than a previous project? Then again, the pervasiveness of the issue. If there is a perceived problem, what types of companies are affected? Is it pervasive across all types, or is it restricted to a particular industry, or is it just restricted to a particular product or a particular jurisdiction? Because clearly we need to assess projects against the number of people who will be affected by any change that we might make. And then we also need to think about whether stakeholders will have the capacity to engage with us, and that relates to the complexity of the issue and everything else that we might have on the agenda. So we need to think about all of those things. And then we also, as well as the criteria that where we expected to get feedback from stakeholders to help the board form their judgments, the board also needs to think about some more internal matters. So we're going to need to think about how any new projects might interact with other projects. We need to think about the complexity of any work that we take on and hence the feasibility. So particularly if we've tried to do previous projects, if we've had previous projects and they haven't, had a successful conclusion, we'd need to think very carefully about whether we were going to take on another project. And also, if it is a question where management need to use judgment in order to produce information, again, it comes back to is standard setting necessarily the best way of addressing these problems? And then we also had to think about the capacity of the board, and this, I think there's two things for us to think about there. I mean, one is obviously the capacity of the staff and the resources and the different projects. But even if it was decided that all staff resource should be poured into standard setting projects and we should abandon all the other activities, which clearly we're not going to do. But there's always a question of the capacity of the board itself. I mean, each board member has to understand every project. So it's fine for the staff to have half the staff working on a project and the other half of the staff need to know what's going on in that project, but not in any detail. But that's not true for the board. Board members need to understand every project at the level of detail required to make good informed decisions. So their capacity, we have to think very carefully about how many projects they can cope with at any particular time. So really, these are just the questions that we have for you. Additional questions not about things not in the request for information. Have we missed any issues completely? They've just somehow passed us by. And do you have any other comments on the board's activity and work plan? We have got some time for questions, so I would welcome anything that people might want to say. Well, maybe you're thinking of questions. If you, Rafal, go to the final slide, we've got just material that has been published and different ways of submitting feedback to us. We would ideally love to have comment letters from as many people as possible. We do appreciate that developing a comment letter can be a time-consuming process. So we've also put up a survey, and really that's there to help us try and reach investors, many of whom don't have the time or resources to put in a comment letter. But obviously you too could respond to a survey if you didn't feel that you had the time to commit to writing a comment letter. But having said that, the comment letters really are our best source of information. So I would encourage you all to submit a comment letter. And for academics in particular, if you could look back at research that you've done or come across, and as we said, Ana would be very pleased to receive links or suggestions of such research, and then she will be able to look at it and distill it for the board so that they can understand what research has been done. I mean, really there we have to be talking about research that has already, been started, if not finished, because you're not going to be able to undertake new research in time for our comment deadline. Which I can't actually remember what our comment deadline is. Rafal, if you'd like to just remind people.
27 September this year.
Yeah.
So we have given 6 months to stakeholders to provide their feedback. And as Anne mentioned, there are several ways. Meetings like this one is one of the opportunities. Comment letter, obviously, and a survey. We have 5 minutes left, so we would like to take any questions or comments. You can share your reactions in a chat. That's a great opportunity to talk about the consultation, which, as we said, is strategic and very important because it will set priorities for the next 5 years from 2022 to 2026.
Where is that? So fairly early on, there was already the slide showing a sort of watershed between the financial reporting and non-financial reporting, where all the non-financial reporting went to a slightly different agency, I guess. Why is that? Why was the choice made to keep that watershed there, to make that such a different thing? Because in the end, it's reporting, right? It's companies showing what they're doing and how well they're faring with that to the outside world.
I'll have a first go at that, and then I'll probably hand over to Rafal. So my reaction is we're not actually. So I think you're talking about the possibility of a sustainability board setting standards for sustainability. So we're not actually splitting the work of the IFRS Foundation into financial reporting and non-financial reporting. We will continue with work on non-financial reporting, for example, through the management commentary project. The reason for having a separate sustainability board is that you need different expertise in very particular expertise when you're thinking about sustainability standards, expertise that the staff and the board, don't have. We're accountants, we're technical accountants, and we don't know about carbon reporting or emissions reporting. That's not within our area of knowledge. We do think that the location for the provision of information that might eventually be required by a sustainability board, if it is set up, could be in the management commentary, and the practice statement that we're working on at the moment, envisages that as being the appropriate home potentially for such disclosures. So we are continuing to think about non-financial reporting. It's not the main focus of our work, that is true, but we're not abandoning it complete. I mean, we're not abandoning it. It is there. It's part of what's covered by the conceptual framework, and to that extent, we continue to have a role in it. Us as the IASB, as opposed to the sustainability board, but the sustainability board will be focusing on, aspects of sustainability, which is a different field of expertise. Rafal, do you want to add anything?
I agree with everything that you have said, and the trustees are also required to undertake a consultation, and it just coincides with the IASB's consultation. So these two consultations are separate. And as part of the trustees consultation, they have consulted stakeholders whether there is a need for single set of sustainability reporting standards. And that's what they have included in their consultation. So this is really to respond to the calls from stakeholders that something needs to be done, some unified approach for global sustainability reporting standards. But these two consultations are separate, and we are trying to be very clear about that, because the board is focusing on the traditional accounting standards, whereas any new sustainability standards board will focus on a broader sustainability reporting, starting with climate-related disclosures. However, as Ana mentioned at the very beginning of this webinar, there are some areas in the financial statements that some stakeholders have identified would need some improvements to how climate-related effects are incorporated into the, for example, into the asset impairment assumptions and the cash flow projections used for measuring impairment of assets, for example. So there are some overlaps, and you may remember the two educational materials that were published at the end of 2019 and at the end of 2020 that explain how the overarching materiality concept should be applied to include climate-related risks in the financial statements. And also, this is, and also, even though you will not find any explicit requirements for climate-related risks in IFRS standards, there are already requirements, and these educational materials explain how these requirements should be applied to account for climate-related risks and how to include the financial effects of these risks in the measurement of assets and liabilities, and how to reflect that risks in the financial position and financial performance of any company. However, there are some calls from stakeholders, and that's what we've described in the potential climate-related risks project in the consultation document. There are some things that some stakeholders would like to see improvements in, and this is, for example, better disclosures about this judgment or sources of estimation uncertainty and how climate-related risks are disclosed by company in their financial statements, actually. So there is a lot of overlap, and but the two consultations are separate, and we are encouraging to share views on both. But what we are looking for in the board's consultation is to focus on traditional financial reporting issues. And as Anne mentioned, the board has traditionally focused on financial statements and management commentary for profit-oriented entities. And this is the traditional remit, and this is the scope of the board's work that we are consulting on. So thank you for this question. I can't see any more, and we have arrived to the end of this webinar. So thank you all for participation.
And we look forward to your comment letters.
Thank you, everyone. Have a good day.
Bye.
Bye.